All right. Welcome back to the channel, everyone. Thank you for tuning in to another video here on the channel. I want to talk about today the strategy I use. Yes, I've talked about it many times over in so many videos, but hey, it never fails. People always reach out to me and ask me if I can kind of break down the strategy again. All right. This time in this video here, what I want to do is I actually want to show you how you can use it um, using lower time frames. Okay, most times I show using the higher time frame. I use range based charts, and the same strategy you can use. It's universal no matter what type chart you use, or chart type. If it's a time base or volume base or tick base, it doesn't matter. Okay, it really doesn't matter because you're trading around supply and demand. Bottom line. Okay. But there's a strategy that I use that allows me to get a better edge in the market, if you want to say, and that's basically using top-down analysis in a sense. But we're really not this time going to be, looking at a higher time frame, but a slightly lower time frame paired with a lower time frame. Okay, because a lot of times we know that we can sit around in the market for just depends, how the market's actually moving. If there's a lot of volume in the market or not, momentum, things of that nature. But look, basically, this opportunity here, and using two paired charts or lower time frame charts allows you to at least execute a couple trades during a session. All right. Sometimes the market is just ranging around, moving sideways, and it may be difficult to actually trade. So on days like that, I'll typically like to stay out of the market or maybe look at a different market. But 95% or more, I'm looking at the E-mini S&P 500. Okay, that is my bread and butter strategy, not strategy, but go-to market that I love to trade. Okay, so this video here is really more so geared towards, I say, new beginner traders or new traders that are really looking to hone in and find a strategy that they can use that allows them to profit in the market. One, on a daily, each and every day. All right. So, and this is how I do it. I mean, this is how I'm able to walk away with a, day's income or salary each and every day in my own personal trading. All right. So, jumping right into it without further ado, let's take a look here. Okay. I'm going to be using my 12 range chart and a 4 range chart. Okay. Now, again, I'm not even going to really use the higher time frame, even though higher time frame analysis is great, but you don't always need to be in the same or taking your trades in the same direction as the higher time frame. Okay, not in all instances. All right, sometimes the market could be pushing to the upside, and then you find a nice setup on a lower time frame chart that could be kind of counter trend or trading against the grain, meaning that the higher time frame is moving higher, and you see an opportunity for a short entry, and you can take two lower time frame charts to really perfect or really get into that trade on a solid base. Okay, so let's take a look here. I'm going to use my 12 range chart and my 4 range chart. Again, if you use time-based charts, maybe you want to use a 5-minute or a 1-minute chart period, or maybe a 15-minute and a 5-minute, or maybe a 30-minute and a 5-minute. It just depends on your style of trading, or if you're a tick-based trader, using tick charts, maybe using two lower time frame or two lower frame tick charts. Okay, so I'm gonna use my 12 range and my 4 range, and I'm going to show you or identify a zone trading supply and demand. Okay, we're going to break it down the same thing I did a few days ago using the higher time frame, okay, as marking up an area of supply, and then using top-down analysis, and then moving down to my lower time frame chart on my 12 range. So let's go ahead and jump into it right now, okay? All right, so let's take a look at this example right here, which I'm going to show you. You see the market, this is on a 12 range chart now. Like I said, this could be your 5-minute chart, or if you're tick-based traders or volume-based traders, whatever lower time frame you choose to use, but make sure you have another lower time frame that you're going to pair it with. Okay, so the market is running to the upside. We're making higher highs and higher lows. Okay, I want to show you now. The first thing that I always want to see when I'm taking my trades to help me qualify the step-by-step process, number one, I have to see a break of structure. Okay, in this case here, we see price making higher highs up to the upside. It makes a high here, pulls back, makes a higher low, boom, makes a higher high with this blue ellipse right here. You see this higher high here. Then it breaks, it pulls back, okay, and it when it pulls back here, it moves higher to make a higher high. So we got a high, higher low, higher high, makes a higher low to break higher, okay? But look what we have going on here. When price took out this area here, we have a breaker structure, okay? Off of the high, higher low, higher high, pull back, boom. It makes a new high, okay? By taking out this area here. So we have broke an area of structure to the upside, okay? That's the first thing I want to see. Once I see a breaker structure, the next thing that I want to identify is where is there aggressive buying in this case, because we're going to be looking for an area of demand, okay? So a breaker structure, an area where there is aggressive buying coming out of the swing to the upside where price broke structure at. And this is going to help me narrow down where my demand zone is going to be located at. Now, you can have, multiple areas of demand, coming out, or a break of structure to the upside in this case here. So this could be an area of demand, but I'm looking at the origination point. Where did the move actually start from, okay? Because that's where primarily I want to get into the trade at. And the price is actually cheaper. Remember when I talked about discounted and premium prices? This instance here, which I'm getting ready to mark up and show you here, this zone right here, this is a highly qualified area of demand right here, okay? All right? Right here, demand, right here. That came out of this area, aggressive buying to the upside. This is where the origination or the initial move or momentum to the upside or volume started with to push price higher to break this area structure. Now, once that has happened, we've got our breaker structure. We've marked off the aggressive area of buying, which is our demand zone now. What we also want to be able to see, what I want to identify, was there an area of imbalance at this origination, not saying entry point, but beginning point where price started to move to the upside with aggressive force, okay? A lot of buying. Yes, there is. When price moved higher right here, before it broke structure, look, it broke above this last hammer or red candle to the downside, this hammer candle to the downside, okay? You want to call it that. See this? This green candle here took out that top end of that red candle, that wick there, okay? When it did that, okay, look, it broke higher. The next candle, the wick of it didn't even come back to fill in that little imbalance. So we have this space here between the top end or the back end of that red candle where the wick is at, and then the last candle, the green candle that took out that red candle in the opposite direction to the upside, it didn't come back. The wick of a candle did not even come back, or the body of a green candle didn't come back to fill this area. So we have our demand zone here. We have an imbalance. We have a breaker structure. This is signifying to me a good high probability area to look for an entry at, as well as we have aggressive buy-in coming out of this area, aggressive force, okay? Now look, once we have that, I'm moving on down to my full range chart now. And the reason being, at this point, everything has really happened for the setup to take place on my on my 12 range chart, okay? I'm going to scale down now to a full range chart, okay? Now you could be using maybe a 5 minute, this could be your 5 minute, and maybe you're looking at a 1 minute chart, say for instance, okay? I'm not saying that range charts, this paired examples of 12 and 4 range, which I'm using, is in comparison or comparable to a 5 minute and a 1 minute. I'm just saying use 2 lower time frames charts, okay? If you choose to, okay? Now, everything's happened here, all right? Everything step by step for me. The breaker structure, the imbalance, the origination point where a lot of volume came out of it. We got our demand zone here at the bottom. So now we just wait for price to retrace back to the zone, okay? Back to the zone. And this is pretty cool here because, look, it pushed up, made a new high, pulled back, made a higher high, a higher low, and then a higher high here. This is good because it's still showing me that price wants to push higher. We made a new high right here after breaking this high right here. So look what happens, okay? Price turns back around and starts moving lower. Makes a low, lower high, boom. It comes back and taps back into the zone here. But what does it do when it comes down on the move back to our demand area right here, okay? After we had the breaker structure. It took out an area of liquidity right here. Okay, so now we have demand resting here with an imbalance. We had the breaker structure. It breaks lower to take out an area of liquidity. What do you think is going to happen 9 times out of 10 when price gets back to this aggressive area buying? When we have a a gap or imbalance set, it's going to want to continue to move to the upside. The banks, institutions have grabbed, smart money has grabbed what they needed to push the market back around. They filled all the imbalances back down to the downside, okay, coming all the way back down to this area of demand resting right here. So now it's time for the ride to the upside. So we're going to scale down now to my 4-range chart, okay, and we're going to look to see what happens as price moves back down to this area of demand after taking out this area of liquidity. All right, let's go down to the 4-range now. Now take a look. Same thing. This is the area, that area of demand off the 12 range. That was that last high it made. This is the move where it made a low, taking out liquidity here. A lower high to pull down now to the area of demand off the 12 range chart, which is right here. Now we're down on the 4-range chart. All right, the lower time frame. Maybe this is your 1-minute chart because you're trading time-based charts. All right. Now what I want to see is basically price shifting to change direction. Basically, taking out a swing, or basically showing me that there's a change of direction or path in the market. Okay. Look, the first high that it makes and takes out an area to the upside here. Maybe this on the 4-range chart, I'm not interested in. I want to see price. Okay, so look what happens. All right, blow this up. All right, so I'm an aggressive style trader. Once price breaks, a level to the upside in a sense, okay, takes out this area here, as it did right here on the push to the upside. The moment it pulls back, again, to an origination point where price broke to the upside here to take out a level, pulls back, and I get a close of a candle in the opposite direction, I'm going long. I'm moving long, or taking a long entry because of the fact is, one, everything's set up nicely on my 12-range chart, okay? Got the breaker structure, aggressive area buy-in, we got the demand, we got the imbalance, prices tap back into the area or the imbalance, and the moment when I scale down or move down to my lower time frame and price shifts and turns direction back to the upside, taking out swing levels to the upside and pulls back, I'm going long, okay? When I get the rejection. It breaks level, pulls back, get a close of the, candle in the opposite direction, I'm going long. And if you look to see what happens here, take a look. Let me show you. This was our demand zone off the 12 range. All right? It took out liquidity right here. Price moves back to the demand zone, boom, takes off after we get a break in the opposite direction, meaning a change in the direction of the market. All right, pulls back, I'm going long, and price goes all the way back up here to 4,066. So that was a good, qualified, high probability setup, okay? Now you may be asking, if I move on back to the 12-range chart, okay, right here, a lot of people probably say, oh, well, this was a demand zone right here with a imbalance. Yes, it was, okay? And price did come back to it. You see, when price broke structure right here, okay, to the upside, you see right here, pull back, boom, broke structure right here to the upside. All right, so we had a high, higher low, higher high, pulls lower, break structure to the upside. And then right here is a demand zone too, right? Yes, is it qualified? Is it a qualified area of demand? I like to pull a Fibonacci. I do not trade Fibonacci levels, but I use it for the simple means of helping identify if we are in a discounted area. Now, look, this demand zone, which I took my trade off of, right here when price comes back down to it, look, it came to it to the tick, and look what happened. It took off. Okay, you see that? It took off and did what? Went all the way, came all the way back up and took out 4,066, right? Now, you may be asking, well, price did tap into the demand zone right here, and it did reject here. Is it valid? Yes, it is. It did reject that zone. But the thing about it, remember, this right here is not the origination point where the momentum started, okay? Where there was the first means of aggressive buying to the upside that broke structure right here, okay? This is where it all started at. This is where the wheel started spinning and buyers started stepping in, okay? All the aggressive buying to the upside. Now, this is below the 50% area, which is in a discounted area, meaning cheaper prices to look for opportunities to go long. Yes, okay? All right, so if you get the rejection, you scale down, everything sets up here nicely as well. You get the aggressive buying, you get, which is an area demand, okay, and you get a gap right here or an imbalance, all right, from where price broke above that last down red candle right here. The green candle took out the last down red candle to the upside, okay, and it didn't come back. So we have a let's take this line here. We have an imbalance from here to here. There's a see that? There's a gap there, okay? Price comes back to it right here, okay? Moves higher, comes back to it, taps into it, boom. You could go long at the rejection once you get the break in opposite direction. I'll be going long probably around 41, 40, 41. And then, but you have to be careful here because you do have areas of, and let's see what we had here. You have resistance above here. So, you have some swing areas to the downside right here. So you got to be mindful as price was pushing lower here. It was taking out some levels to the downside. Swinging low, lower highs, lower lows, lower highs, lower low. Boom, broke below this swing right here. It took out liquidity right here. So be careful right there. But that's cool because once it does take out liquidity and tap into a nice key area of demand where there's an imbalance at and we had to break a structure, boom, takes out liquidity. That's fuel for it to push back higher, okay? And it did that. It tapped in here, boom, pushed higher, okay? Hit this area of resistance right here, pulls back, and it breaks even higher before pushing lower, okay? You just need to know, what to do when price gets to an area. Look at every area or swing high above, equate it or use it as an area, a means of liquidity, because at the back end of every swing is liquidity, okay? All right, as price swings lower, makes lower lows and lower highs, at the back end of these highs is areas of liquidity that price is going to try to take out, and it does. It pushes higher, it takes this area here. See what it did? It wicked out right above it, took the area of liquidity, pulled back, made a higher low, push higher. It didn't come up here and take out the back end right here, but it tested this area right here, and then it decided to push lower. Now, right here is probably where you could have got out at if you take a look here, because price pushes up here, all right, rejects, tries to push higher again. The wick there is another sign of rejection. First reject off this wick here, second rejection right here. That would tell you to get out the trade, all right? To definitely get out the trade because price is rejecting to push higher, okay? So I wanted to show you, just a very simple strategy that you can use, especially as a beginner trader, which allows you to basically build up confirmation and confluence, which will help you qualify and get into better high probability setups, okay? I just want to leave you guys with that. If you're someone out there that's watching this and you're a new trader, a beginner trader, hopefully this helps you out. I appreciate everyone tuning in and watching the video. If you're interested in joining the Discord community, find the link down in the description portion below. People ask me on it daily about the elite membership. How can they become an elite member? An elite member just basically means that you are supporting me as a content creator here on the channel, but you receive perks and rewards behind it, okay? You receive the trade breakdowns. So when I post videos basically breaking down my trades to where I go into detail, so I'll take, you'll see me post my live entries, on the channel. I have tons of videos where you can watch my live trading sessions, and I'll go back and I'll do trade breakdowns to where I break down and go into depth of what I was looking for lead up to the trade, okay? Breaking it down so you can kind of get an inside scoop and inside inside of my mindset of what I was thinking, as if you're sitting right next to me looking at my chart. So I break it down about as elementary as I can in detail, so that someone that's new to trading can grasp and understanding. So if you're interested in joining and becoming an elite member, click on the membership tab on the YouTube channel. Okay, you'll see a tab there that says membership. People always ask about it. How can they become an elite member? But you also receive, I want to say this, the a video playlist of a group of video links that I put together that I felt and feel as if they are great videos for anyone that's starting off their trading venture and trying to learn a great strategy surrounding supply and demand. So tons of video content there as well. You also get like the priority reply to the comments. Basically, when you post something, I can see your comments kind of pop up first, as well as you get emojis, member shout outs. I haven't done those in a while, but I shouldn't. I need to get back into doing that. It's been so busy. But basically, the trade breakdowns in the video playlist is what people are really, signing up for, as well as I should say, the effort of supporting the content for me here on the channel. But it's all for the price of a cup of coffee monthly, in a sense. I mean, it's like $6.99 is what it is, okay? Monthly, all right? So, I mean, that's like what you guys are spending probably on a cup of coffee, once every day. Some people drink coffee every single day from Starbucks or whatever the case is, and spending, $5.99, $6.99, or $10 a day, or whatever the case is. For $6.99 a month, you are really getting your values worth with the trade breakdowns and the video playlist, I feel. But like I said, I appreciate everyone who signed up for and becoming an elite member. Thank you for doing so and supporting the efforts here on the channel. And I try my best to give back what I can by means of all the video content I've created and really breaking the trades down. So thank you if you've already a elite member, and if you're looking to join, just click on that membership tab on the homepage. But that's all I have for you guys in this video here. Hopefully you found some value in the content. Appreciate you, and I will see everyone in the Discord tomorrow and on Friday. Take care. Signing out.